What do you make of Secretary Yellen's comments and your read on that GDP print that we saw yesterday morning?
Good morning. It's great to be here and great to see you. I think that the consumer is just fine, and that is 70% of U.S. GDP. But between jobs being plentiful and wages going higher and $2 trillion in excess savings, as Janet Yellen referred to, there's pent-up demand, and that is a very important part of our economy. And I do think you are going to see the consumer continue to spend. I was on a conference call the other day with Hilton Management, their earnings call, and they are sold out on the leisure side. Their prices are going higher than 2019 levels. So the demand is there, and as I mentioned, the pent-up demand is really significant. I do not get nervous about yesterday's GDP print of only 2%. Because I do think that there were some issues like the Delta variant really spiking throughout the quarter. You have supply chain problems. You've got labor shortages. So I do think the fourth quarter will see better growth. I think next year will be actually the first half of next year because of this pent-up demand and also this strong manufacturing. I think you're going to see above-trend growth. So I do not subscribe to the stagflation theorists, which is what I heard all day yesterday. I do think inflation is real, and I think we have to watch for that, and we have to find companies that have pricing power. But overall, I think the growth will be strong. So I agree with her on the growth side, just not on the inflation side.
And if you think that the growth is real and it's something that we have to watch, she also said in the interview that she still thinks that the term transitory is appropriate for the situation. Do you think it's still transitory?
Well, I think parts are transitory, Courtney. I think the commodity side, I think the bottlenecks will get fixed, and we will get the goods from the ports, from the ships at the ports. But I do not think that wage growth and rental costs are transitory. So I do think we're going to have an elevation of inflation, not runaway inflation, but higher than what you and I are used to and what everybody else is used to over the last 20 years.
Fair enough. We got some big names, of course, reporting after the bell on Thursday with Apple and Amazon. Both of those names pulling back here in the early going, likely to start the trading day lower. Do you think there's opportunity in this pullback, or with a name like Amazon, which really hasn't done much in quite some time, you still need to wait and see?
Well, I think Amazon is more interesting than Apple, to be honest with you. But the problem is that you have 100% of the sell side with buys on the stock, right? So it's loved, right? And they are going through this spending cycle. But eventually, they'll get through the spending cycle, and the investments, which you want a growth company to do, will lead to better growth. The e-commerce slowdown, it's a little disappointing, but the AWS numbers were huge. 39%, with margins at 30%, 200 basis points better than expected. That's really why you own Amazon, quite frankly. So if that one were to pull back more from here, it's certainly interesting. The setup into 2022 is more interesting to me than Apple, which is going to have supply chain issues, I think, throughout 2022. I mean, look, Chuck Robbins was on CNBC a couple of, I think it was earlier this week, and he basically said he doesn't think that the supply chain gets fixed until second half of 2022. So we've got time on Apple for now, but Amazon is the one I would be looking at.
Yeah, and Amazon is so interesting. I made the point in an earlier interview that the revenue from AWS was higher than the revenue that we saw from the e-commerce side for the very first time. And to your point, usually that's sort of been the profit engine, but not necessarily where we saw the bulk of the revenue. Do you think that's a shift that's permanent, or just a slowdown because of this quarter with the pullback in e-commerce growth?
They're so big in cloud that I would have been happy with 30% growth. I would have been thrilled with 30% growth. But 39% is such a huge, huge number. There's only 15% of the companies' workloads in the cloud. Right. So that just tells you that there's so much runway for all three companies, for Microsoft, Alphabet, and for Amazon. So I think it's going to stay strong for a long time. I think the comps eventually get easier on e-commerce. Right. So let's get through that piece of it. But as I say, first quarter of 2022, I think I'm going to take a look at it.